Welcome everybody. It's Mark Coe for March 30th. I wanted to take a look at, we did a live session this morning in the room to show everybody what we do, and we actually were able to kind of diagnose a trade that was a little interesting in the sense that it was short-term in development. This is a trade, crude oil, and I know I talk about the futures quite a bit because it gives us some decent activity, but crude oil, I'm just going to go over what the model has done. The model has had us long since last Friday, and the model is having a nice little run here in crude. I don't know how long we'll stay in this position. We'll see what the model does. But the model gets us long right here at 47.68. So you can see where the model entered. That was last Friday, or last Thursday evening, actually, U.S. time. So the model is well in the money after going through a little bit of stress on early Monday, and then the markets rallied, and we haven't seen those levels since. But the market continues to advance here. Now, I was mentioning this yesterday in that this was a fairly easy trade to hold, maybe not as easy of a trade to intraday swing around. But today gave us something a little bit different, and I'll show you what I'm talking about. But I want to reference a couple longer-term levels just to show you where they're coming from, because it's always good to have that multiple time frame walk down. And what you'll see here, crude oil, why we're using these levels. The spike high from the 16th of March, right, post FOMC. Now this is after crude has already started its breakdown. And there's a whole bunch of activity up in this section from the 9th of March after your post breakdown. And so if you look at it as a zone, you've traded into that zone, but you haven't violated it to the top side yet. So that's what we're seeing as the afternoon closes here. We're already through the pit close. But I wanted to reference this level right here, this 50.15, or I guess it's 50.14. I was using 50.15, so I was a tick away. But this is what I want to reference as I go to dial it down to a shorter time frame. And I'm going to show you what I did in the U.S. session, and it was right at the start of North American trade. And pulling from my newsletter levels, I was using 49.75. So here's your 49.75. I'll dial that in right. Where is it? Right here, 49.75. So what I was doing was using the breakthrough 49.75. So that was a early morning level, and then the pull back to it to get long to target what I just was indicating there, the 50.15. Now the reason this one played so well is because it was a string of levels. And what you'll see here is on the U.S. session report, you had resistance at 49.75 broken, now allows you to come back and use it as support. And then you had 50.15, which took it out. So live in the room, we were talking about this trade and saying it really should be able to take out this 50.15. It did not go to the third level, which was 50.70. You see we've made a little section here where sellers are actually getting some late afternoon, at least able to hold this level around 50.50. But no real sell side action yet. They're just able to hold the level. These were the two interesting spots to be able to join in this party on an intraday basis, right? So yesterday I was referencing the difference between a position trade versus a day trade. Today is a day where this crude market is actually given opportunities intraday, versus yesterday there was not a ton of opportunity, at least to deal in and around levels. And what that really means is being able to deal with some type of support or resistance to lean against. Today created two beautiful opportunities. Again, that 49.75, that rotation, that was almost $700 in one contract if you took long side there to that move. The next one, 50.15. Now this market got stubborn here on this pullback. This market got a little stubborn because you talk about locked to a level. 50.14 was the level. I was using 50.15 just because I round to the nearest 5. This thing went to 13 and just went bid, would not come off of that 13. That was a pretty strong market, and all in all, crude has been unbelievably bid the last several days. Taking a look at some currency action, euro continues the weakness. Now, I have been wrong on this one, but the one thing I like to point out when I am wrong is how little you're giving up to be wrong, right? So I talked about being wrong underneath 0730. By all means, that happened. So Would have loved to have been more on the short side of this action, but stuck with the short dollar trend a little too long. The idea was that you would see some type of crude bounce. I'm sorry, crude. Euro bounce, and this was the 730 level I was playing off. So it was those dips underneath 750 which allowed me to even try euro longs that again didn't develop. So off that trade, we'll wait for a better opportunity. Not much to see here. Dollar yen. Still focused on further dollar yen gains, but now we're into this zone that I keep speaking about, this longer 111.60, 112 zone. This was the big break to take the dollar down to that final 110.10, 110.12 area. So this break below 111.60 has been capped for the last, I don't know, week and a half, and now we're testing back into it. So if you look across the board and you look at pound strength, euro weakness, Aussie, somewhat of a bid tone, maybe not today, but in general, you're not seeing this massively clear dollar strength or dollar weakness, but you are seeing some recovery in some of the trades that were hit the hardest coming into the last 2 weeks. So you are seeing some recovery. You do have month end. You're going to see some rebalancing. So just be very aware of the level that's sitting there, that 1160 to 1200. I'm still going to be buying dips in dollars until that 110 is taken out, but I'm going to be doing it at edges, not just middle of the range. So I'm going to be using edges. The first edge that will come into play is 1070 to 111 for me, and then below that, you're going to require a bigger dip. So for right now, I'm going to need a pullback to even look to get long dollar yen, and we'll go from there. The other thing that was a little kind of movement wise to what I wanted to see was gold here. There's not much of a bounce, but I'm waiting for several days to be able to find gold at this 1245 level, and we traded 1245.90 today, so not down to the whole number 1245, but in the dollar of it. So this is the level I'm playing for. So I've been really patient waiting on gold. Gold has not had a lot of opportunity to deal inside those numbers, so it's been very range bound, has not visited either extreme. So for the end of the month, it's Friday coming into tomorrow. Today is 30th of March, Thursday. We will assess the market and see what kind of opportunities. But for now, I'm going to continue with the idea of trying to buy dips in dollar yen. I still like pound higher, so I will continue to look at pound dips. Euro I'm off of right now. Did not hold the levels I was looking, so I'm not going to stick with it in terms of a broken record trade and just ride it lower. That's not the idea. That's currencies. Crude oil, again, the model's long. I'm not going to fight it, and I don't have much to add up here just because you don't have any bottom edges to buy against you. So we'll see what the short term holds for us tomorrow. And it's always so key to be able to look at markets both on a long and a short term. And long term may be a bit of a misnomer. I think what you have to do is look at bigger picture time frames, something to at least let you understand where you're trading. A lot of us will focus on markets in a shorter term, but I think you need to understand where you're dealing. I was telling somebody the other day, this idea of dealing in the short term, I get the draw to it, but you have to look longer term. I'll just show you this really quick before the video ends. The Euro Aussie, right? This person was selling Euro Aussie up near 43, and I said, did you go look at a long-term chart? And the answer was yes, that's why they were looking. But look at the level they found by dealing up with a longer term. Now, you would have only seen this if you went back on a daily chart, maybe 4 hour, and you dealt back till January. But that represented almost 600 ticks lower, and to look to deal in the same area, which is what happened here a couple days ago. So it was a really good heads up by a newer student. So I really like that type of analysis. That's the point of doing longer term analysis, even if you're dealing on the shorter term. So I got to cut the video. I get to the 10-minute mark, and then my video cuts off. So I will bid you all farewell, and I will talk to you next week. For March 30th, it's Mark Coe. Cheers.